Welcome to our stream of the Professional Pensions Investment Awards 2021. My name's Jonathan Stapleton, Editor of Professional Pensions. The past 18 months have been hugely challenging for the pensions industry, and we've all had to deal with the investment impacts of one of the biggest pandemics in the modern era. Yet, while the industry has been hit hard by COVID-19, which has thrown up numerous challenges for pension schemes, their advisors and investment managers, I think it's fair to say the industry has risen to this challenge. Throughout the pandemic, pensions have continued to be paid in full and on time. And as an industry, we have, by and large, found solutions to the problems that have been thrown our way. But all of this couldn't have been achieved without a huge amount of hard work by the industry's trustees, scheme managers, advisors, and of course, investment managers. The PP Investment Awards, which are now in their 8th year, look to celebrate the excellence among asset managers and celebrate their work over the past year. The process for these accolades is unique within the industry, with the shortlist being drawn up in association with Aon, one of the leading investment consultants in the market. The shortlist is broadly based on performance over the 12 months to the 30th of June this year. But in addition, it also recognises the need for consistent performance, so entrants were only shortlisted if they demonstrated both excellent performance over the past 12 months and strong 3-year performance too. Shortlisted entrants were then asked to complete a questionnaire asking them what makes them stand out from their peers in terms of innovation, client service, sustainability, diversity and inclusion. The winners in each category were then decided by a distinguished panel of industry judges. My sincere thanks go out to Aon and all of our judges, without whom these awards would not be possible. Choosing the winner for this year's awards were incredibly tough, and every finalist should be justly proud to have made it this far. And while we're not celebrating in person this year, we're thrilled to announce the winners of these awards from the safety of our own home offices. So, grab yourself a drink, sit back, and if you're shortlisted, cross those fingers. So, on to the awards. Drum rolls on the desk, please. First up, we have the Alternative Risk Premium Manager of the Year. On your screen, you will see the 3 firms shortlisted for this category. The winner of this category has drawn on its 30-plus years of quantitative macro and equity experience in its risk premium strategy, using the same models, trade signals, portfolio optimization, risk management and execution as in its full hedge fund strategies, rather than simple factor models that have been developed standalone. Judges praise the firm for the way in which it approaches risk management, as well as its execution capabilities. The winner is Man Group. Next up, we have the accolade for Absolute Return Bond Strategy Manager of the Year. Once again, you will see the shortlisted firms on the screen beside me. If you're on it, all the best of luck. The winner of this category is a specialist fixed income manager that runs 6 absolute return strategies, including a flagship investment grade absolute return fund, which has consistently performed well against its peers. The firm was commended in particular for the way it integrates ESG across its entire suite of strategies, as well as for its proprietary ESG evaluation framework that assesses around 1,200 issuers, representing over 90% of its holdings. Congratulations to our winner, Blue Bay Asset Management. Moving on to the award for Emerging Market Equity Manager of the Year. The shortlist can be seen on the screen next to me. The judges picked out one firm in this category worthy of a highly commended accolade. A big well done to Morgan Stanley Investment Management. The winner of this category differentiates itself from its emerging market peer group by offering 2 independent autonomous teams in the asset class, one focusing on the developing world and the other on emerging markets. Judges praised the firm's approach to diversity and inclusion, as well as the way its emerging market strategy is committed not only to generating sustainable earnings and returns, but also to making the environmental and social progress in their respective markets. The firm was also commended for its establishment of an investment group focused on post-venture investing in Greater China and the subsequent launch of a new strategy which focuses on disruptive, innovative, fast compounding public and private companies early in their growth life cycles. The winner of the Emerging Market Equity Manager of the Year category is Artisan Partners. The next category is for the Equity Factor Index Provider of the Year accolade. Please have a look at the 4-strong shortlist as it appears beside me. The winner of this category has been at the forefront of index construction and maintenance for many years, launching its first global equity indices in 1969 and its first factor index in 2006. It was commended for the way it continually expands and enhances its index offering to reflect the evolving needs of institutional investors, enhancements which have included the introduction of an adaptive multi-factor allocation approach in 2019 and the launch of growth target indices in 2020. Ladies and gentlemen, the winner is MSCI. Coming next is the Global Equity Manager of the Year category. Another strong shortlist can be found on the screen beside me. Judges awarded a highly commended accolade in this category to Baron Capital. Well done to them. Our winner says it is given its edge by the real-world business experience of its co-founders and portfolio managers who, in a career between 1994 and 2008, built and managed a number of successful media and software businesses, executing 30 acquisitions in the process. This experience has helped shape our winner's approach to investment in public equities, and it considers each investment as if it were buying the whole business, using the same level of research and due diligence as the founders did when they were making private acquisitions. The firm was praised in particular for its approach to business sustainability assessment. Its quality framework enables its research team to compare businesses between different industries and is a key input into its portfolio construction, with some 92% of its universe failing this assessment. The winner of the Global Equity Manager of the Year accolade is Metropolis Capital. The next award is the Global Fixed Income Manager of the Year accolade. As usual, the shortlisted firms are displayed on your desktop beside me. In 2020, the winner of this category integrated its regional investment businesses to create a global investment firm under a single brand. The firm was commended for the way to maintain the stability of its teams and its protected performance for clients throughout this integration, with all its globally diversified strategies outperforming their respective benchmarks over the 1, 3 and 5 years to 30th of June 2021. The winner of this category is Aegon Asset Management. On to our next category, which is the Hedge Fund Manager of the Year award. Good luck to all those on the shortlist beside me. The winner, which offers a broad range of fundamental and systematic investment strategies, was commended for the way in which it continually evolves its strategies. During the past year, for instance, its focus on harvesting returns from China has seen its clients derive measurable benefits from the opportunities present in this market. Judges also praised the firm for the way it directs significant resource at the procurement, cleaning, analysis and utilisation of new data sources. The winner of the Hedge Fund Manager of the Year award is Marshall Vase. The next award is for Liquid Securities Manager of the Year. Please take a moment to look at the shortlisted firms. The winner of this category saw strong inflows from institutional clients in the year to 30th of June, posting 27% growth in the assets managed for pension scheme clients over the year. The firm was praised for the successful launch of several new strategies during the year, its proprietary ESG scoring system, and the engagement work it has done with issuers to improve data reporting to clients. The winner of the Liquid Securities Manager of the Year award is 24 Asset Management. Moving on to the MultiAsset Sector Credit Manager of the Year accolade. The winner of this category invests across a particularly broad range of credit asset classes, including investment grade, high yield, emerging market debt, securitized and bank loans, something it says has helped it to successfully navigate the credit markets through COVID-19, as has its global approach to investing. Judge has commended the firm on its innovative use of artificial intelligence within its investment process and its proprietary early warning CSR tool. They also noted its product innovation, most notably the private credit fund it launched in partnership with another Natixis investment management affiliate for the UK DC market. The winner of the Multi-Asset Sector Credit Manager of the Year category is Loomis Sayles. The next gong goes to the Multi-Asset Manager of the Year. Another shortlist of leading names is beside me. The winner of this category believes overly complex, over-engineered strategies can be difficult to explain to investors and may not perform as anticipated. As such, it has maintained a relatively straightforward structure for its flagship fund, having a core of predominantly traditional return-seeking assets and a layer of risk-offsetting positions which aim to dampen volatility and preserve capital. The firm's strategy has met its key objective of capital preservation while delivering positive returns in every calendar year since its inception. Judges commended the firm on its ability to be tactically flexible and opportunistic, as well as the way in which it communicates with clients, something that was particularly important at the height of the pandemic. The winner of this category is Newton Investment Management. Moving on to our next category, this time for the Pan-European Core Property Manager of the Year. The shortlist is once again on the screen. We have another highly commended accolade in this category, which goes to Barings. A big well done to them. Our winner maintains a clear, focused and disciplined approach to its investment strategy, taking advantage of the cyclical nature of real estate through flexible weightings to 4 risk profiles: core stabilised, higher yielding stabilised, asset management intensive and value add. Despite the pandemic, the firm has made several acquisitions and assets held have seen market rental growth, notably in the logistics sector. In addition, it has sustained fund occupancy at 95%. Ladies and gentlemen, the winner of the Pan-European Core Property Manager of the Year is LaSalle Investment Management. Moving on to the award for Quant Hedge Fund Manager of the Year. The shortlist is on the screen now. Our winner believes its location in Stockholm, Sweden, away from the world's major financial centres, gives it a distinctive edge, enabling it to recruit top talent and build an open, innovative culture. It also believes its location has heavily influenced its approach to sustainability, an area which it has become an early adopter when it started trading 2 ESG futures during the first quarter of 2021. The firm also prides itself on the high degree of portfolio and strategy transparency it provides to investors. The winner of the Quant Hedge Fund Manager of the Year award is Lynx Asset Management. We now move on to the accolade for Sustainable Corporate Bond Manager of the Year. The shortlist for this category is now appearing on the screen. Judges praised the winner for the development of 2 SDG credit strategies, which use a proprietary measurement framework to employ an objective and consistent approach to assessing the impact on corporations of the 17 Sustainable Investment Goals and 169 sub-targets. The firm was also commended for the launch of a Paris-aligned sustainable credit strategy, something which it believes aligns both its commitment to sustainable investing and its innovation within fixed income to support the need of its clients. Ladies and gentlemen, the winner of the Sustainable Corporate Bond Manager of the Year is Robeco. The next award is the Sustainable Equity Manager of the Year accolade. As usual, the shortlisted firms are displayed on your desktop beside me. 2020 marked the 25th anniversary of the launch of the winner's first sustainable equity strategy, a milestone it believes shows its commitment to ESG. The firm was commended on the way it has integrated ESG into its analysis and decision-making, especially on the way it quantifies the ESG impact on value drivers and demonstrates the positive impact of ESG factors on outperformance. Indeed, in 2021, its fundamental equity team released research which showed that between 2017 and 2020, some 19% of excess performance was attributable to the integration of ESG in the core of the investment process of its Sustainable Global Stars strategy. The winner of this category is Robeco. On to our next category, which is the UK and European Opportunistic Property Manager of the Year. Good luck to all those on the shortlist beside me. The winner of this award believes its local presence is a key tenet in its investment philosophy, providing it with real-time local market intelligence and helping it identify trends early. It says its local strength also enables it to take an active approach to asset management and also facilitates access to strong off-market deal flow. The firm was praised for the way it integrates ESG into both its investment and management process, seeking to achieve the highest ESG certifications for all its assets in the portfolios, and using ESG enhancement as a key component of its strategy to drive value-add returns. The winner of the UK and European Opportunistic Property Manager of the Year award is Barings. The next award is for UK and European Commercial Real Estate Debt Manager of the Year. Please take a moment to look at the shortlist on the screen. Over the past year, the winner of this category focused on three key areas: responding proactively to the COVID-19 pandemic, expanding its ESG efforts in its lending business, and championing inclusivity and diversity in its firm. It was particularly praised for its work on ESG, where it has implemented a new investment process to better evaluate and monitor ESG across its debt investments. The new process included additional ESG borrower assessments that identify green building certification, energy performance certification, as well as the borrower's plans, broader ESG strategy, and industry affiliations. It also included physical climate risk assessments and extensive new internal ESG loan assessments. The winner of the UK and European Commercial Real Estate Debt Manager of the Year award is PGIM Real Estate. Moving on to the accolade for UK Core Property Manager of the Year. The winner's UK Real Estate Fund is one of the few structured as an authorised contractual scheme, having been formed from the merger and transfer existing property assets held by two established UK life funds, making the assets accessible to external investors via the ACS. It is structured with defined and fixed dealing dates alongside a minimum investment of £50 million, all designed to provide stability and attract long-term, like-minded institutional investors of scale, as opposed to shorter-term traders. The firm was commended for going above and beyond to meet the challenges of COVID-19, using the pandemic as an opportunity to improve its client and tenant satisfaction, something it can demonstrate through strong rent collection and low void rates. The winner of the UK Core Property Manager of the Year category is Royal London Asset Management. The next gong goes to the UK Equity Manager of the Year. Another shortlist of leading names is beside me. We have another highly commended accolade in this category, which goes to BMO Global Asset Management. A big well done to them. During this pandemic, as in other crises, the managers of the Winners UK Special Situations Fund believed it was important to focus on a company's ability to trade through a downturn and its potential to emerge on the other side in a healthy position to take advantage of any subsequent upturn. The firm was commended for its economic advantage investment process, designed to ensure an owner-manager culture is present in all smaller companies in which it invests, with its fund having a minimum threshold of 3% management equity ownership on its stocks. Ladies and gentlemen, the winner is Lion Trust Asset Management. Moving on to our next category, this time for the UK Fixed Income Manager of the Year. The shortlist is on the screen. The winner of this category was praised for its collegiate approach to investing and the way in which the whole of its team's experience is reflected within decision-making. It was also commended for its systematic approach to research, which helps its managers identify key strategies that add value. Ladies and gentlemen, the winner of the UK Fixed Income Manager of the Year award is Royal London Asset Management. Moving on to the award for UK LDI Manager of the Year. The shortlist is on the screen. Judges awarded a highly commended accolade in this category to Legal & General Investment Management. Well done to them. Our winner was praised for the launch of its new Target Leverage Pooled Fund solution, which provides leverage gilt-based profile LDI funds as well as UK and global equity funds in a capital and collateral efficient format. It was also commended for its DB Plus service for pooled fund investors, which offers implementation and monitoring of LDI portfolios tailored for each client, but in a pooled fund format, making it accessible to schemes of all sizes. The winner of the UK LDI Manager of the Year award is State Street Global Advisors. We now move on to the final two awards, both looking at defined contribution. First, the accolade for the DC Investment Innovation of the Year, and the shortlist for this category is now appearing on the screen. The winner was praised for its launch of what is believed to be the world's first net zero pension in January 2021, providing people with the opportunity to save for retirement while also helping to tackle climate change. It was also praised for the launch of its in-app voting functionality, which allows customers to vote on issues that mean a lot to them. Ladies and gentlemen, the winner of the DC Investment Innovation of the Year award is Cushion. Our final category is for the Target Date Fund Manager of the Year, and the finalists are coming up next to me now. The winner of this category was praised for the introduction of a new investment approach in its target date funds, aiming to deliver the returns required to provide members with a moderate level of income at retirement based on the PLSA's retirement living standards. The firm was also commended for introducing an allocation to its Global Impact Fund in its target date strategy and for introducing a low carbon overlay on its factor equities at the end of last year. Ladies and gentlemen, I'm delighted to announce that the winner of the Target Date Fund Manager of the Year award is Aon. Well, that marks the end of this year's PP Investment Awards. A massive well done to all of the winners and those who have received highly commended accolades. If you were shortlisted but did not win, well done to you too. All of the firms mentioned today should feel very proud indeed. And thanks once again to our partner and headline sponsor for this event, Aon, and indeed all of our judges. Thank you again for tuning in. I hope you enjoyed it. Fingers crossed that next year we can celebrate in person.